Yahoo Finance descending on the Milken Conference in California. Special guest here with me right now, that is Bill Ackman, Pershing Square CEO. Bill, good to see you. Big day for your company, $900 million investment in Howard Hughes. Why make this play?
Sure. Well, the story begins arguably when I began my career. Very early on, Warren Buffett, Berkshire Hathaway letters, beginnings of my investment education, and the story of Berkshire Hathaway. Buffett buying, basically control of a textile business and then transforming it over time into a diversified holding company. We know how that story is. It's not really ended
60 years later, right?
60 years later, Mr. Buffett finally, remarkably at 94, passing the torch. But that was an inspiration for me. That led me to go into the investment business, and I entered the same way he did. I started a hedge fund, and I became a shareholder activist, which he was. But the business plan was always to get to what we call permanent capital. We took a step in that direction when we took one of our funds public in Europe. But the kind of ultimate investment dream is to have a public company where you could build with permanent capital. You can follow investment principles and build a business of significance. And that's what Warren has achieved, and that's what we hope to achieve with Howard Hughes. We've had a long-standing investment in the company. It came out of an investment we made in General Growth. We spun out of, when that company emerged from Chapter 11, we spun off a company called Howard Hughes Corporation, which owned the real estate development assets of the General Growth company. And General Growth had acquired a company called Rouse, and Rouse had a business of building small cities, what we call master plan communities. I think of them more like cities, but they're not incorporated cities. In the Woodlands, in Houston, Summerlin in Las Vegas, Bridgeland in Houston, and that business is a remarkable business. But it's not one, it's a long-term play. For the first 14 years, it was consumed a huge amount of cash. Today we generate, the business generates cash. We reinvest that cash at Howard Hughes in the equity of buildings that we need in our various communities. So it's a very good business. Much better business than the textile business.
And you'll be executive chairman.
So what we're doing here is, Pershing, the funds have a 37% stake prior to today. The Pershing Square Management Company, which is the business that manages our various funds, that's owned by myself and our other partners, and we brought in some strategic investors last year. It's that entity. It's making investment in the company. I'm returning as executive chairman. Ryan Israel, CIO of Pershing Square, he's going to become the CEO of Howard Hughes. The rest of the team is going to stay in place. Dave O'Reilly, CEO, and we're going to build a company together.
When can you pull the trigger on the big, the elephant-sized deal that Warren Buffett will always talk about?
We're going to start not with elephants, not rabbits, but small animals.
What are you looking for?
What are we looking for?
Yeah.
We're looking for businesses that have great, durable economic characteristics. It's an uncertain world, so you want a company that can withstand tariffs, pandemics, volatile interest rates, volatile moves in currencies, etc. We look for the kind of super durable growth company. We want businesses that are in high returns on capital, that can grow as far as the eye can see, that are non-disruptible. And we're going to look for businesses that of a scale that's appropriate in light of the scale of Howard Hughes. Howard Hughes today, 11, 12 billion of assets, 5 billion or so of equity. And our freely available cash today, call it $1 billion. And then we'll work from there.
How are you, essentially you're building a modern day Berkshire Hathaway. How would you compare yourself to Mr. Buffett in terms of how you invest?
He's got more experience than I do. He has a different approach to health than I do, but I aspire to have his longevity and his mental acuity.
No cans of Coke for you, right?
No cans of Coke. I'm not a huge fan of Coke. I think it's caused a lot of harm. I would say I've learned a lot from him. I would say Warren loves the same kind of business as we do. He hasn't, I would say, generally been prepared to pay up for them. He has very, very disciplined on, I'm not aware of a business he's purchased where he paid more than 10 times basically operating earnings. I would say when we bought Chipotle, it didn't look cheap. Many companies we invested in over time didn't look cheap at the time, but they became cheap very quickly by virtue of growth in the earnings, cash flow of the business over time. But I would say very similar principles about how we think about capital allocation, how we think about incentives, how we think about the kind of people we want to do business with, the kind of people we want to partner with. So
you were in that room, or you were at the Berkshire meeting,
yes.
correct? What was that? For those not there, take us inside there. When you heard Mr. Buffett say he would retire at the end of the year, what went through your head?
So you're in a room with 44,000 people or something like this, all of whom, or many of whom, Warren has completely transformed their lives from a financial perspective. I don't know how many millionaires, 10 millionaires, 100 millionaires, billionaires he's created just by virtue of them owning the stock. But there are also many people there that may not even own Berkshire, but learned from Warren, followed his principles, built careers in the industry. I'm certainly one of them. I don't own Berkshire Hathaway stock today, but I still go to Mecca because I want to reset, make sure my investment values kind of stay the same. I think all the shareholders have been nervously not looking forward to this day, I would say. But what a graceful way to pass the torch. An emotional moment, almost tears in his eyes, I would say. I think his longtime partner Charlie Munger passing away, obviously a massive blow. But he still was remarkable. 94. 3.5 hours of Q&A with like a 1 hour break. I mean,
nobody else is doing this.
It's amazing.
What are some of the biggest challenges you think his successor, Greg Abel, will be up against?
So Greg, I think, is a spectacular operator, and by all accounts. I'm sure he's also an excellent allocator of capital in the businesses that he's overseen. I would say the challenge for him is he's got $350 billion in the balance sheet that Warren Buffett couldn't find a way to spend, right? So that's going to be important. And he's not going to be able to spend it all buying stock back, right? I don't think he's going to pay some crazy dividend. So I think the biggest challenge for him is to find places and ways to deploy that capital intelligently in buying businesses that are not currently owned by Berkshire. Right? It's a different challenge to think about buying a new company for $20 billion versus making the incremental decision to invest in this power asset, or this subsidiary of Berkshire today.
Is that elephant deal out there for Greg?
Well, look, I think, private equity is competitive, 10 billion. They're not competitive at 50 or 100, but, the universe of companies of that scale that are willing to be sold, I think is very, very small, right? Most public companies view it as a failure, particularly one of that kind of scale, to be sold. Burlington Northern selling itself to Berkshire was kind of a surprise to me. Most companies of that kind of scale want to stay independent. If they're underperforming, they replace their management, they replace the board, an activist shows up. They don't really sell themselves. So it's a big challenge.
Can Greg keep Berkshire intact? And should he? Because I think one would make the argument maybe Buffett has put so much trust in so many different executives that he hasn't necessarily fired people when they should be fired.
Yeah, so I think there are very compelling arguments for why Berkshire should stay one big diversified holding company, the most important of which is insurance is about half of the value of Berkshire. The flexibility that Berkshire has to invest in the insurance company portfolio in equities, for example, comes from the fact that it's part of this extremely creditworthy enterprise. If, for example, you spun off the insurance company, it's of enormous scale today, so it can still do a lot, but it's very comforting to the policyholders of Berkshire's insurance operations that there's a big, huge conglomerate that's uncorrelated with insurance that's supporting that, if necessary, that company. So I think there's a lot of compelling arguments for it to stay together. I don't know that value would be created breaking it apart, the tax benefits, other aspects. So I say it stays together.
Do you think he could run it better than Warren?
I think to your point, Greg has enormous credibility as an operator, and that was really not, I don't think of operations as Warren's top skill set. I think setting up the conditions for an executive to succeed, creating the right incentives, I think that's absolutely Warren's down the middle of what he does. I've talked to CEOs of Berkshire subsidiaries, and they talk about how Warren, the taking the truly long-term approach While they watch competitors doing stuff in the short term to make earnings look good, Berkshire is prepared for any of its companies. They don't care what earnings are in the next quarter. They care about, are we building long-term value? That basic principle, I would say, is going to certainly remain. Is there going to be a little more focus on margins, optimizing businesses, not for the short term, for the long term? I would say that wouldn't surprise me under Greg's leadership.
Ahead of this interview, Bill, I was thinking back to some of your investments that you still have in the portfolio. Chipotle, I think Nike. I just talked to Chipotle CEO Scott Boatwright. Their business is slowing down because of tariffs, he told us. Nike, their big businesses where they make a lot of products, Malaysia and China. Does this worry you as an investor in these companies that trade is really starting to have an impact?
We care about the value of a business. The value of a business is the present value of the future cash flows. What's going on now certainly could be disruptive in the short term. I don't think it's likely to have permanent effects. I do think it's important that we get through the tariff negotiations quickly. I think it's important that we pause the pause the tariffs, or we certainly take them down from 145 to 20 or something like this. I think that puts us in a stronger negotiating position with China. It puts China in a weaker position. Stronger for us because our economy will be stronger in that world. You don't want to be under the gun, have the U.S. economy weakening while you're trying to make a deal with China. Once we take the tariffs down with China, the Chinese are actually highly incentivized to make a trade deal quickly, because if they don't, they're going to lose many more businesses that are going to move their supply chains elsewhere.
145% tariffs on China. How do you think that impacts second quarter earnings for companies, third quarter, fourth quarter?
It depends very much on the business. Most of the companies we own are not going to be dramatically affected or will be minimally affected other than general economic effects, but not particularly pernicious effects on those businesses. I think what you'll see is if you're like Best Buy, and everyone's stocked up on TVs in anticipation of tariffs, it's a bit like the front loading of COVID. You could certainly see Q2 or Q3, a lot weaker.
I talked to Apollo CEO Mark Rowan, told me that the trade war is damaging the U.S. brand. Do you agree with that?
I think the way that it's been executed has shocked the world. When you shock the world, it creates volatility, uncertainty. Trump has kind of a unique negotiating style. I would say it's good that it's unique, because if it became the only way the U.S. negotiated going forward, I do think it would have issues. He's been effective over the course of his life in getting things done, operating the way he operates. I think people need to understand this is his sort of MO. But I think the United States will still be, I think U.S. exceptionalism is absolutely true. This is definitely the best house in the neighborhood. It's the best place to do business, and I think it's going to become a better place to do business with deregulation, with tax reform, and the resolution of tariffs. And
you're still a supporter, even though the volatility in markets has been there, you're still supporting the president and his initiatives.
Absolutely. I want to see the president succeed, of course.
Lastly, Treasury Secretary Best just gave a speech here, packed house. I want to get your thoughts on this before we go. He said the U.S. is entering a new golden age of economic prosperity for both Main Street and Wall Street.
Yeah.
You're one of the most legendary people on Wall Street, in my view, for the past 25 years. Do you think we're entering that golden age?
I think it all depends on execution, but there are lots of reasons why Scott could be right. We've suffered from enormous bureaucratic waste and inefficiency. DOGE is underway to address that. We have a thicket of regulation that's really holding back growth in the economy. We have the permitting process in America, federal, state, local. There's obviously, I'm listening to the Treasury Secretary speak about the difference between doing business today in Texas, trying to build a plant, and doing business in Illinois. And we need to make it easy to do business in America, and they're working very hard at that. I think they're going to be effective. Yes, we've seen the president, use his influence to address these kinds of issues, and I think he's going to help there. Lower taxes for companies that build things in America. The deals that are being made, the trillions announced of companies and countries that are committed to build in America, and also I would say an inflationary backdrop that's getting a lot more favorable. Energy prices are come way down. egg prices, if you will. The $2 egg is hopefully a thing of the past. So I think we are absolutely the potential to get there. I'd like to see us through the volatility of the tariffs as promptly as possible. I think that's important.
Fair enough. Bill Ackman, Pershing Square CEO, good to see you. Big news, $900 million investment in Howard Hughes. Appreciate it. We'll talk to you soon.
And by the way, it's not so much the investment in Howard Hughes, that's important. By the way, we're paying $100 a share for a stock that's trading at 65, right? So obviously we think there's a lot of value.
48% premium?
We think there's enormous value in the company. And we're a meaningful, very significant change in strategic direction while maintaining kind of the core engine of that company today, which is the real estate business.
Do you see yourself as the next Warren Buffett? Do you think like that?
No.
No. Okay.
Warren's an icon, and he deserves his own place in history.
All right, Bill Ackman, it was a pleasure to see you. Thank you so much, appreciate it.